we talk about merchandiser, that's a fancy name for a retailer where we buy the merchandise and then sell it. It also could be a wholesaler, which is that middleman who buys something from the manufacturer and then sells it to the retailer. When you buy appliances, usually those come through a middleman that you don't even know about. So that's a wholesaler. And I guess the versus is if you're the other choice, if you're not a merchandiser, then you're a manufacturer. Those are not covered here. Manufacturers, what you do in the next accounting class. So we're going to assume we're either a retailer or a wholesaler. So we buy stuff that's already made. We're going to also start with different types of inventory systems. And so we have perpetual inventory. That means that you keep your inventory up to date as sales are made. Again, this is one of those olden days versus currently. I remember when they first made those US UPC seals on the side of all the cans. I said, oh, that's great, but it's only going to be good for the Walmarts. Nobody else is going to have the equipment to read those. And now every mom and pop shop does that. You can read them on your phones. So as technology has changed, most people will keep perpetual inventory so they know inventory is up to date. The other choice, the versus, would be periodic inventory. And that would be, we just wait till the end of the period, monthly or weekly, and we'll count the inventory and figure out how much inventory we have at any point in time. So we don't know if we've got inventory in stock or not until we do that count. So you can see why they don't use that much anymore, but it made sense before computers. So we're going to focus mostly on perpetual. Another terminology thing we want to make sure you understand is cost versus price. The cost is what you buy something for, and the price is what you sell something for. Which one of those numbers should be bigger? If you plan to make any money, this should be the bigger of the two. This is what goes into revenue or sales. And this is what goes to, if we're talking about inventory, your cost of goods sold. Now, when people just chit chat, they'll use those terms interchangeably, and even me, amazingly, make that mistake on a video or two. But you have to realize when you're talking specifically about inventory, that the cost is what it costs you to buy, the price is what you sell it for. The other thing to remember, one person's purchase is another person's sale. Again, if you think about on Amazon, you can purchase things on Amazon. And when you purchase something, that means somebody else sold it to you. Going the other way, you can sell stuff on Amazon. And so that's going to be a purchase to the other person. So what we mean is make sure you know which side of your transaction you just care about your side. So we always have to know who you are when you make that journal entry. And especially in this chapter, because we're doing sales and purchases in the same chapter, it gets a little bit confusing. So make sure you remember if you're purchasing something or selling something. If I'm Apple, I might sell iPads to Best Buy. To Best Buy, it's a purchase. To Apple, it's a sale. And Apple doesn't rightly care how Best Buy records it, and Best Buy doesn't care how Apple records it. You just care about your own little world, your own little company, and what the other people do isn't your business. Make sure when you're doing this, you go back and say, am I buying it or am I selling it before you start making your journal entries? So we're going to start with purchases. So I'm going to be kind of the Best Buy on this side, but to make it a little bit more personal, we're going to purchase inventory let's say we're the SIUE bookstore and we purchase iPads from Apple and we sell them in the bookstore. Again, I'm SIUE, so this is me, and I'm going to buy them from Apple. And I'm a retailer, I'll eventually sell them to the students, but that's a whole separate kettle of fish too. So I buy 100 iPads. I'm going to get inventory, and this is left over from things we've done before, so I'm not going to spend a lot of time on that. And it's on account, which means it goes to accounts payable. Remember, if I'm buying it, it's a payable. You can also kind of double check, it has to be a credit, so it has to be a payable. 300 times 100, I can kind of cheat, 300 times 100. And so 30,000. When I get them, 2 of the iPads are defective. So the box is beat up and we look and the screen's been broken. So we return them to Apple. If that's the case, my inventory is going to go down. So I'm going to start with the credit. It's a little bit easier. So I'm also going to reduce the accounts payable because Apple's not going to make me pay for it. So I basically just reverse, means flip. So I reverse the prior entry for those 2 iPads. They're 300 each times 2, so $600. So that's how I handle returns and allowances. Just basically reverse out what you did on the sale for the amount that they're going to reduce your inventory. The next thing we have when we work in a company and we buy a lot from the same manufacturer or wholesaler is we often get discounts. And so people want you to pay quickly. They might charge you interest if it takes you too long, but going the other way, they'll give you a discount if you pay early. So it's a nice little incentive. They'll phrase the credit terms something like this, where this is the percent you get off. And usually it's not a whole big amount, but here this is saying you get 2% off. This is if you pay within this many days. So this is within 10 days. And then the N stands for net, which means the whole amount. And this one is within this many days. So if I was going to write out the words here, this is saying you get 2% discount, 2% off if you pay within 10 days, or kind of the balance is due, kind of the net within 30 days. So you can see how much space this little stuff saves by coming up with an abbreviation. It's unique to each company. So you might see something like 315 net 60. So that would mean you get 3% if you pay within 15 days, pay the net within 60 days. So those numbers will change, but the order and the meaning always stays the same. This one we get 210 net 30. I'm going to pay within the discount period because I saved 2%. So if I got the cash, let's do it. I'll put it down here, give myself a little bit more room. So I had 30,000. If I look at my accounts payable, I had 30,000 over here. I returned 600. So the balance due at this point is 29,400. So when I pay off my accounts payable, I got to get rid of that because after I pay it, I'm clear. Accounts payable has to be debited because I need to close that account for 29,400. But that's not the amount of cash I'm going to send. I'm going to take that 29,400. You can do it a couple different ways. I'm going to do it this way. We're only going to pay 98% of that. So that times 98% is 28,812. So that's how much cash I'm going to pay. And I always write it on the bottom because I know there's a middle one. And I don't know if it's a debit or credit. And I want the debits on one side and the credits on the other. So that's why I'm covered either way. My debits always have to equal my credits. So the number that has to go there has to be 588 to make that work. but try not to force things if you don't have to. I should be able to take 29,400 times 2%, or 0.02 to make it 2%. Gets rid of those two zeros. 2 times 4 is 8. 2 times 9 is 18. Carry the 1. And there's my 588. You can force it, but always do the math, because sometimes, your calculators sometimes give you the wrong answers. You swear you put these two numbers in, but you come up with some screwy number. Your discounted number has to be less than your accounts payable, or you typed it in wrong. And it has to be kind of close to it. So if you came up with 2,881, you're screwed up too. So use a little common sense when you look at your journal entries. And what this means is, really, truly, did I pay $300 for each one of those iPads? And the answer is no, because I paid on time. So I want to reduce the cost of my inventory for that 588. If I'm looking at my cost of my iPads now, I bought them for $300 originally. I got my little discount. So really, they're only at $294 each. Kind of check that. This is the total amount of cash you paid. How many iPads do you have left? You sent back 2 of them. So you've got 98. Do that on your calculator. Lo and behold, you will come up with that 294. Anything that you basically pay for inventory extra, or if you get any discounts, you want the value of your inventory to, in essence, to be what's the amount you paid for it. When all said and done, to get it into your place on the shelf, that's what you want your inventory to be.